Ladies and gentlemen of the crypto space, we're live on a Monday at 11:29 a.m. November 23rd. It's the name of the game. It is Market Fever. Things are going on. It's awesome. What a wonderful day. Today's title is Money Makes Money. Crypto Yield Recap 5% target because that's what we're here for. Recurring revenue streams. Nobody wants a one time gain. A one time gain is just that, a one time gain. You want some shit that keeps coming and coming and coming. You want the gift that keeps on giving. Stuff like that. Today's episode, along with all episodes, is sponsored by Change Angel, non-custodial swap exchange for social goods. Stop depositing on exchanges. Say no to centralized exchanges. Not your keys, not your crypto. That's the name of the game. Let's bring it over to the main screen and see what's going on. Twitter's been on fire all morning because the market was on fire all morning. Ethereum started ripping past $600. Ripple is killing it, ladies and gentlemen. It is obviously at the bottom. So this is a topic I want to get into because this is like Ripple, Cardano, and the crypto assets that have a notable stigma against them, historically speaking, of course. But when price action turns bullish, that's it. It turns bullish. It is what it is. Technicals versus fundamentals. You could always have the fundamental argument for or against the potential for an asset, the strength of an asset, the market, the so on and so forth for an asset. But that's separate and apart from technicals. So the technicals here are overwhelmingly bullish, which is absolutely fascinating to see because they have been so bearish for so long. But when you see something rip through 200 EMAs on the daily and rip through, guess what? The most previous high, smacking right into a previous high. So this is bullish. What you see, I have the orange lines up. These are the previous highs. What you'll end up seeing here, if the market remains bullish, is something like this. It'll range, and then it'll eventually break through. And that's the way bullish markets works. This is a bull market, and everything is bullish, which is really exciting. This is the red chart. This did pierce the 200 EMA on the daily to the upside yesterday, but it fell back down. Suffice it to say, the Stoke looks like it has a higher low. MACD is inclined, trending positively. I expect this to break at some point. You do still have the compression. This isn't overwhelmingly a falling triangle, a descending triangle. I do think this has this slope to the support line, which is more consistent with a symmetric triangle. It's not overwhelmingly symmetric, but the point is there is slope to the support. So the and the combined with the macro, the prevailing narrative for the space is bullish, and the fundamentals of the project of RunVM. So there's no logic or excessive confluence to support a bullish direction that the asset will take. The odds are this will break to the upside at some point. The question is when. There's the logic on that one. Let's see who's in the stream. Stelios is in the house. Always a pleasure. Bitcoin is the arc, and I'm the captain. No, yes, I want to help the best I can. That's all I can do. I am not the best, but I help the best I can. I guess maybe no one is the best. The whole point is to have as many opinions as you can, a collective opinion, and that's the best you could possibly do. Heirlooms in the house. ¿Qué tal? ¿Todo bien aquí? Bueno, buenos días. George, what kind of VPS do you use for BlockNet node? I run a server out of the house. When BlockNet starts pumping, probably the next whenever, I'll probably just throw it on AWS. A light sale node, relatively budget friendly, um, fixed monthly expenditure. But right now I just run out of the house. Lewis, my man, always a pleasure. I own Cell and BTC. I'm putting them into Cell systems to earn yield, baby. Woo, yield. That's exactly the topic I want to get to today. Loving that yield. What is that? Celsius is throwing around 5% on Cell. I mean, Cell, listen, my narrative for Cell is that Celsius, that uh, he's honorable. And there's reason for him to be honorable. And it's the same reason that I'm so angry at Fiat. Fuck Fiat. And he might be that angry. And if he's that angry at Fiat and he wants to disrupt the system, this is going to be one of the biggest corporations in the world. And Celsius will be representative or equivalent to some degree to an equity. Well, I mean, not that they treat it as an equity, they treat it as an asset, but equities are worth hundreds of billions of dollars. 10, 20, 30, 40, 50. So the equities, if you look at the New York Stock Exchange or NASDAQ, are very expensive. Companies running around worth hundreds of billions of dollars. So why can't sell be an asset, but priced comparable to much of the equity space, or maybe even more, because the crypto space tends to be the equity space exaggerated, exacerbated. One of those words. So Cell is producing some nice yield. Bitcoin on Cell is at 6.2% up to 5 BTC. Anything over 5 BTC, I believe, is 4 and change percent. So I love Cell. I have it maxed out at 5 Bitcoin or at 6%, which is obviously a couple $1,000s a year. And the same with BlockFi. BlockFi they give you 6 and change percent up to 2.5 Bitcoin. Very comparable business model. Mashinsky doesn't think highly of BlockFi. Obviously, Jason and Pomp like BlockFi. Um, So I don't have any reason or any indication that there is anything overwhelmingly negative of BlockFi as compared to Celsius. Just, a little bit of bad vibes between the owners and CEOs. But otherwise, the functionality seems comparable. The business model is logical. Collateralized debt, over collateralized debt, or maybe even under collateralized debt. The point is, the vast majority of the yield is going to the liquidity providers, and that's what banks don't do. That's what banks take from you. That's what banks steal from you. So there's room in the industry for companies to change the name of the game, to disrupt the shit out of the legacy banking system, because the legacy banking system does absolutely nothing for you whatsoever. Barry's in the house. Always a pleasure. Rick G, XRP bullish because you can stake it on Cosmos DeFi option, I think. There's bullish narratives, XRPL and the Flare network. Um, I don't own XRP. I think there's better assets. But that doesn't take away from it being a powerful technology, and it likely to appreciate substantially. And I've said that before, and there's nothing wrong with it. The biggest argument I've had against Ripple lately is that the the technicals look horrible. You couldn't have touched it. This is horror. This is some of the ugliest technicals I've ever seen. But you can't deny this. This is a trend direction shift. This is bullish, bullish, bullish. So what you want to do is wait for a resistance flip support. You want to wait for this to fall back down to a previous resistance, watch it flip support, and that's a good entry. So you get an entry. You could trade this if you want. I have no interest in trading. I will not be trading this. I have no interest in trading this. The vast majority of my value is in Bitcoin, as the topic of this stream, which is yield. I want recurring revenue streams. Trading an asset only to sell it later, that's not a recurring revenue stream. That's trading. That's gambling. That's a one-time win, baby. That's not what it is for me. That's not my story, and that's not the story I tell you guys. George is in the house. Always a pleasure. SJ says, can you comment on Elastos? No idea about it. Likely not much interest in it. Does it produce yield? Even if it produces yield, I can't spread too thin, so the odds are I couldn't take a position, even if I wanted to. Captain Weber's in the house. Always a pleasure. Uh, Curve and Rook. Well, Curve is, I have a massive position in Curve, something like, well, you guys know what I have at this point. Let's pull it up. I think Curve is going to be an absolutely enormous organization, somewhat of the Forex, FX of the crypto space. Um, I have about 33,385 VECRV. I provide liquidity to Curve to the tune of 40,000, which gives me a recurring revenue stream denominated in CRV, which I put back into VECRV to get more. 3 CRV is the yield from the admin fees from locked CRV. And I continue. I've been locking in the YVECRV, which gives me 1.5 times as much CRV as compared to locking directly in Curve for VECRV. I do this. This additional yield is because the urine vaults are generating a certain amount of CRV because of how much liquidity they're providing, and the YVECRV gives me access proportionally to the amount of curve that the urine vaults are in control of. So that's what this vault is. This vault gives you perpetual claim on curved out and min fees across all urine products. Very straightforward vault, what they have created, and they clearly state what it does and why it's generating 1.544 times the amount of yield denominated in CRV as compared to directly placing your CRV in VECRV. Now, bear in mind, you lose the complete control over the voting process, of which I'm very happy that I have a large amount in VECRV, but I plan to take an equally large amount of CRV and place it in YVECRV to take advantage of the 1.544 times yield. That is a big deal. It's a massive 50%. Huge, huge. I'm going to ask the obvious question, Lewis. It's all good to ensure you understand fully. Why does Celsius Network attract so many deposits, and why does the token keep going straight up? Because Celsius is buying their own asset, buybacks. They're taking profits and buying it up. It's not they're propping up the asset, but bear in mind they're also creating their own market. Um, you're talking about an organization that lends has collateral, so they're able to get loans themselves, and they're obviously able to lend stable coins and lend crypto, but they're also able to use that value and get loans from other places. And so they have a huge amount of capital. This is basically what banks do. Banks have a huge pool of liquidity, and they're giving out loans, getting interest, getting interest. So the difference is um, a bank historically kept the profits. That's what banks do. Banks are public companies. They keep the profits. What Mashinsky and BlockFi, what Zach and the boys at BlockFi are doing is creating a company where the vast majority of the profits go back to the liquidity providers, unlike at the bank. So the goal, the business model for BlockFi and Celsius is to, if they want to create more revenue for the company, they have to scale liquidity and lending. They have to scale. It's all on scale, and that's what basically the modern tech world has taught us with Facebook, Instagram, Twitter. You have a certain amount of user base, and the user base is valuable, and then you monetize, and then how do you make more money? You scale. You grow, you scale. You don't gouge your customers with ATM fees and overdraft fees and other scams that these banks do. The banks are dying, they're dead. Stop using banks. Well, just understand that there's risk in a bank, and that's the fallacy. The fallacy is that there's no risk in a bank. Because you put your money in a bank, they're losing 10% of your money per year because they're not behaving as a fiduciary to protect your money. They're not actively trying to protect your money. All they're doing is holding it and holding it hostage and lending it so they can make money while it's losing money to inflation because they're not acting as a fiduciary. It's absolutely insulting what the banks do. It's insulting. Macromind says, Noah, when looking for confluence, which time frames are most pertinent to you? The longer time frames are overwhelmingly the most pertinent, particularly because they give you the longer term perspective. Short time frames are fun, but they don't give you the whole thing. Like, look, if you go to Bitcoin, you look at the short term time frame, clearly we have a breach to the downside of the prevailing trend. And we obviously have a breach to the downside of the 200 EMA and the 30 min. So, bearish, but for how long? Clearly, it could go down all the way here to the 200 EMA on the hourly, and you're talking about 17,800. Do you think it goes down that low? I don't know, but check this out. Let's take a horizontal line, and here's our supports. Support, 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 whoop, whoop, support, boop, boop. And there's your support down here, but obviously you have your here. Look, it's nice. What's cool when the 200 EMA coincides with the previous low, local low. That's usually the most significant support. So there's good chance that it hits here and bounces. There's much better chance that it hits there and bounces. because it's a double support, the 200 EMA plus the most previous low. That's a big deal right there. And plus, look, we're getting oversold on the hourly. There's a good chance it doesn't even make it to this lower low because the prevailing story for Bitcoin is so damn bullish. It doesn't mean you're necessarily going to get even to the most previous lower low. That's the name of the game. I think your curve narrative is on point. It's my pleasure, Rick. I try. I just so I'll get back to the topic, or at least try and get some points in on the topic of yield, which I've talked about curve. Let me just go through the rest of the chat. Hey, Charlie, always a pleasure, my man. George says, what time? Oh, I scrolled. What time frame for your BlockNet investment? No time frame. I just have a service node for many years now at this point. If it happens, it happens. Just the story of BlockNet is so incredible from a technology perspective. It's something that I personally appreciate substantially. Locking and YVE curve still counts for the 2.5x bonus of providing liquidity in curve. No, that's another good point. So you're not going to get your gauge bonuses. Good point, Stelios. Lewis says, what project would you avoid when searching to stake earn yield? Junk bonds versus AAA rated. Pickle. Pickle Finance just lost 20 something million dollars. A Seal Finance. Any of those stupid finance products. So bear in mind, look, it's nice that they're doing financial and economic experimentation. The problem is this is very complicated code, and only the smartest people in the room are capable of protecting their platform and aggressively iterating on their platform. And there's only a couple of platforms that have proven to do that safely and effectively thus far. And those are the big boys. Ren has killed it because they just did so much due diligence prior to the release of their mainnet. Curve, Uniswap, Balancer did pretty good. Bancor's been around since the Stone Age, 2017. Kyber's done well, but Kyber the price is horrible. I couldn't take a position in Kyber if I wanted to. I mean, come on, we know who's winning. Yarn, we know who's winning, boys and girls. Stick to the ones that are winning and avoid the ones that are taking excessive risk. MakerDAO, I said Abe. Just Stelio says, so if do I just lose the lock CRV? Yes, so that's the deal, Stelios. When you are providing liquidity to YVECRV, you're losing your capacity to boost your gauges, boost your yield for curve. But you're getting 1.5 times the amount of yield in 3 CRV from your VECRV using the back scratcher. You know, it's give or take. And personally, I like that I have a bunch of VECRV because I have my voting rights for the platform, and it's meaningful to participate in the governance of the platform. This is an incredible project. Incredible. 33.77% on about 40 grand. That's nice. For 35%. It's big numbers, guys. If I could get my yield up to like 25, 30, $40,000 a year, that's some nice gains. And the whole goal is that's going to fluctuate over time, and hopefully this just grows into 10x in the next like 3 to 5 years, and then I get to relax. Thank you, Charlie. Appreciate it. Pleasure. Stelio says, of this 8 page is the only for locking new CRV instead of doing it on curve. No, well, bear in mind this 8 page is Yearn. This is a Yearn back scratcher vault. So this is created by Andre and Bantag, which are pretty much folks that do Yearn. So they themselves are using the Yearn back scratcher vault, part of their compound governance vault, the compound vault. So this vault does it. Is growing at about 5%. Personally, I think this is low. So you put in your this is a token, by the way, CDI plus CUSD. C that's the Curve Compound Pool token. That's the token you get when you provide liquidity to this pool. But I'd rather take my gains denominated in CRV rather than what this will give you, which is this pool's token. You're getting a 5% yield on this pool's token. I prefer to get my yield denominated in CRV because that is going to give me uh, the governance rights and the yield associated with VECRV, which is three pool, which will give me more CRV. This is a fight uh, of you're constantly getting not liquidated. You're constantly getting diluted. So your CRV is constantly getting diluted because Curve has emissions and there's more locking of VECRV. So it's a fight to maintain your proportional ownership of VECRV. So how do you do that? By providing a liquidity position. Now bear in mind, don't take too much risk. I feel comfortable with this amount of risk. Frankly, if I lost this, I'll have to pay the IRS substantially less. And and I kind of want to lose it because I really don't want to pay the damn IRS, bastards. So I borrow that money actually from MakerDAO, of which I have 7.5 Bitcoin locked, and I'm borrowing the 42 and change. It's 42 because took 5 and I put it into Bancor's DAI BNT pool. So it's not providing that much gains, 2.96 it looks like on average, which is relatively small for the crypto space. But it's also going to give me Bancor yield with their liquidity, their incentives, and that's given for 455% for the DAI BNT pool for BNT and about 100% for DAI. So if I could that'd be nice gains, and we'll see how that plays out. I figured I'd throw a little in there to see how it plays out. Um, Only a little bit. So what did I do? Only about 1,000 BNT, small position, relatively speaking. And the die is borrowed, as I said, from Compound MakerDAO. Um, don't want. You can't hold Pickle. Pickle. They told you to evacuate your funds, boys and girls. Pickle got hacked for 20 mil. Don't do it. Don't do it. George Rotaro looking forward to Pizza Fine. Oh, goodness gracious, yeah. I have Simpson Finance, Seal Finance. There's a bunch of them finances. It's just risky, risky, risky. The fun one now is Keeper because Keeper is providing a fair amount of yield denominated in their governance token. There's no governance set up yet, guys. This is premature. This thing was launched less than a month ago. Um, so you're talking about over 120 something million dollars worth of liquidity, I think, is currently being provided. Yields are only being provided thus far in Keeper, which has been decreasing steadily. I remember this at 50%. That's how much liquidity is coming into the system, how much interest there is. But what's important is here. This is the amount of gains the platform has in less than a month. In less than a month, Keeper DAO, when this loads, you'll see how much they've generated. The DAO has generated 1,362,000, which will obviously get distributed proportionally to the people that provide liquidity. And where does that money come from? That's the whole white paper. That's why I've said to read the white paper and what KeeperDAO does. These boys do some serious arbitrage, and it's designed to attract the smartest people in the room that are serious, serious arbiters. Absolutely impressive what the DAO is designed to attract. Intelligence attracts money, and that's why this DAO has caught my eye. Well, another big reason this DAO has caught my eye is it has a market cap of $5.8 million, guys. This thing could go 100 times on its money, $10,000 per rook. Obviously, it's getting diluted, but 10,000 a rook, and this will be a $500 million asset. It'll be a fraction of the size of Yearn. Yearn is an $800 million asset, but bear in mind it also has 30,000 max supply, so that's why it's running around at $23,000 per. This has a million max supply, but it has 51,000 current circulating because the emissions are coming from the Rook. It's the governance, the incentives provided denominated in their governance asset. So bear in mind this is big risk. This is a $5 million asset, so it's, throw around 1-2%. So what did I do? I have my Uniswap Ethereum Rook pool that I provided liquidity to. Once this loads, I have 36 Rook in there, 7 Ethereum, about 8 grand, and it's produced about $204 in the last like 2, 3 days. So if I'm making like $40 to $80 a day, I'm not going to say no to that, guys. So this is cool. There's risk associated with it. If the Rook has a problem, it's this is going to pool is going to be lopsided towards Ethereum. And the whole point of that is that's where impermanent losses come in. But I'm expecting, I don't really mind. I mean, Ethereum, I'm expecting to outperform the world, and Rook, I'm expecting hopefully to outperform Ethereum. So worst case scenario, if Rook doesn't outperform Ethereum, and Rook fails, maybe I don't know, I'm still in Ethereum. So this is a pretty decent pool to generate yield and have some exposure to an asset that may have significant asymmetric returns. Rook catches on, that's a big deal. But that doesn't mean throw around money. Don't throw around 30, 40, 50%. These are tiny numbers. In all honesty, this is a relatively small number for me, guys. Just honestly, it's about a 1.5%. What I've won, so to speak, over the DeFi summer and what's been going on lately. There's some made a lot. It's the name of the game. Cover protocol, cool. Yeah, insurance, I like it. I'm not in it right now. Cal's in the house, always a pleasure. Macromind asked if I'm providing liquidity for Rook on Uniswap. There's the deal on the screen right now. What I got. Um, Stelio says he invests in Curve for the 2.5 boost, so APE is not attractive. Can argue with it, so bear in mind you only need a certain amount of VECRV for boost. So I'm maxed out. Even if I provide more VECRV, I won't get more boost. So my positions are max boosted, 33.59% there and 64.78% there. So I'm good here. So, but you make a good point. So you want to get your max boost. I mean, this is free. This is free yield, man. This is some serious yield because, frankly, I think Curve is an asset that's going to have asymmetric returns. I think Curve is going to outperform the shit out of the market over time. I mean, literally, it's for a protocol that's in a duopoly with Uniswap, and it's a systemic component of the crypto financial system. How else? How is it not going to have asymmetric returns over time? Folks are just seeing risk on the table and seeing the inflation, but over time the demand will exceed the supply, and that's just the name of the game. George says, "Kidding. I became way more responsible." Yes, yes. Min risk, max reward. Don't gamble. Listen, if you have a relatively small portfolio, if you have like $1,000, $5,000, ten, whatever you got, you should be 85% Bitcoin and Ethereum. I'm probably like, I mean, my altcoins have outperformed, but I'm probably about 65% Bitcoin, 20%. You know why I'm hesitating? Because Ren just killed it, man. Ren was like 2% of my portfolio that turned into like 20%. And still, so Ren, here, let's look at Ren real quick. So Ren, so this, I bought Ren down May, January, February. I was in Ren here. I think May. I was in Ren in May. March, January, February, March. No, March. I was in Ren down here. So I watched this thing go up to an 11x. I ripped an 11x on Ren, but I'm still like 6x. This is like 5 or 6x over here. So Ren is like 20% of my portfolio right now, but I can't liquidate it. So I don't want to liquidate it. I like Ren what it does. It produces yield, and that's my end goal. But technically, my portfolio is skewed, or it's overweight Ren, all things considered. Very complicated decision to keep this much in Ren, but I think it's going to outperform. I think it's going to produce asymmetric returns. It's just too strong of a fundamental narrative. What do you think about Cover? Cover's a good deal. I'm not in it. There's the other insurance protocols as well. Insurance is a big deal. It's going to be a big part of the financial system, the crypto financial system. Stelia says, "What is the relationship between Ren and Keeper DAO? Is it Long? Isn't it? Long didn't do it. What's the CEO's name? There's no direct relationship, but people that are programmers and software engineers and brains create multiple projects. So I think Keeper DAO is a manifestation of Embarrassing. I forget his name. The CEO of Ren. That's to the best of my understanding. Bear in mind that is a great thing. The psychology that the folks at Ren deploy are, was it bar none, or they set the highest of standards. The psychology that Long presents when he's talking about Ren is he has a very clear mind. Has a profoundly clear mind the way he talks about the psychology involved in incentives and actors and motivations and encouraging behavior. So that's what's so cool about these DeFi protocols is it's not gambling, it's yield derived from transaction fees, but it's also game theory and substantial psychology involved and understanding the motivations for behaviors. That's a real deal, folks. This is definitely not trivial stuff. Let's take a look, Digi. Digi's talking about Ripple. No, it's not. I don't know what you're talking about. It was ripping, but now it hits significant resistance at its most previous high. And right now it's holding. So let's take a look real quick. Let's zoom in for the fun of it. I don't usually look at Ripple, but this price action is killer lately. So it slammed right into resistance, I'd expected. Bear in mind, it slammed into this resistance as well. I mean, this thing was down to like 26.94, probably even lower when I was looking at it. This was a massive candle. But then it broke through. It hit the most next high, and it has not broken resistance. So if you zoom out to the daily, you see where it is. So this was your previous higher high, and then you got your highs over here. But look, it slammed right into resistance. So it has to break through that. If it breaks through that, I mean, you're talking about a significant rip to the upside afterwards. Let's take a look real quick. Talk about another 12% to the upside if this breaks. And it will over time. The prevailing market is extremely bullish. The whole trick here is you want confidence that it's not going to return to its previous pattern, which is historically bearish. So what you do is you wait for a retest of resistance, flip support, and then a break to a new higher high. So I'd love to see I'm not a trader. I'm not going to invest in this stuff. I'm not interested in having a position in Ripple. It'll be spread way too thin, and it's not an asset that's consistent with what I'm interested in. I want yield. But then again, I can take Ripple and probably provide the Celsius, but that's another story. Whatever. Suffice it to say, not interested. That doesn't mean there could potentially be a fair amount of money to be made here. You wait for a rip to the downside, a resistance, flip support, a break to the upside. So right about here, you take a position here after a confirmed breakout. And dare I say, that's going to rip 12% to the upside. Or you could easily see another resistance flips and test support, and then another one to the upside. The whole point is the odds are this thing's going to be stepping upwards because that's what the entire market is doing. It is stepping upwards. Then it says, dairy swap? I don't know, man. There's a lot of swaps out there, guys. And there's a lot of look, EasyFi is that L2 solution that folks talking about on the Matic network. And then Polkadot and all these Polkadot assets with ERC20s. And I'm like, what are you doing? What's a Polkadot project doing with an ERC20? That's the most ridiculous notion in the world. You're a substrate asset. A subscan and you find real Polkadot, substrate, parachains, real Polkadot assets. These are the real assets. Anything else, I don't know what they're doing. Unless they have a bridge and they're interacting with another Polkadot substrate asset, Polkadot blockchain, substrate blockchain, which is the Polkadot parachain. And that's so you want to then for a project like that, like for EasyFi, what I want to know about is the bridge. Tell me about the bridge. Where's the bridge? Because L2 solutions are only meaningful if they have a bridge to Ethereum, guys. If you're looking at Cosmos projects and you're looking at Polkadot projects, they better be talking about a bridge. Seamless. You want to be interacting on Ethereum with Polkadot or vice versa, but not having to deal with swapping from one chain to another. That needs to be seamless. And now you're getting to a project that has a solution in place. Yes, stake dot. I stake dot. I stake Atom, Cosmos, Kava, Band, IrisNet. Those are inflationary yields. Those are POS, proof of stake platforms. Dot, Kava, Atom, Iris, and Band. Inflationary. So, I much prefer yield derived from platform trading fees or the governance assets, which have potential asymmetric returns, albeit even though the Cosmos and Polkadot assets are inflationary, the yields derived from inflationary source, there's likely asymmetric returns to come over the next couple of years. So that's why they're too interesting not to take. Charlie says 21 watching, 10 likes. Hit them likes buttons. Like buttons, folks. 12:04 p.m. on a Monday. Thank you, everyone, for joining me. Smack those thumbs up buttons. Tell everyone to subscribe. This is another hot stream. We got another hot one coming tomorrow. Shoot me some topics. I'll be on Twitter. I thank you all for joining. I wish you all a wonderful day. Peace.